This is Alan Bush with the Daily Financial Forecast for Thursday, April 7th. Starting out with the stock index futures, first of all, yesterday we did see some good gains in the afternoon trade after the minutes from the most recent Fed meeting were construed to be neutral to a little bit dovish on balance. However, today we are seeing some pressure linked to weaker energy prices. Also, we do have earnings season starting on the 11th with Alcoa to report after the close. Also, we are hearing that earnings in the first quarter could possibly drop by over 9%, and this would be primarily due to the energy sector. However, we have to remain bullish. The indices on ideas that interest rates globally are likely to remain very low, and we also believe that the Fed will be very slow to raise rates. So even though the earnings outlook isn't that great for the first quarter, the interest rate outlook is, and that should dominate and take stock indices higher for the longer term. Now, moving over to the currencies, some pressure developing in the euro currency. This after the minutes of the ECB's March 10th meeting, indicating that more stimulus is likely. So from an interest rate differential point of view, the euro currency under some pressure, and this also supported the U.S. dollar to some degree. Seeing the pound trading lower, even though we did have house prices surging in the month of March, as traders focus on the political aspects of what's going on in the UK and the possibility that the UK could leave the European Union. And we think that is a correct assumption, that it's the political aspects of this market that should be focused on. So we remain bearish on the British pound and the yen advancing to a 17-month high, as the Bank of Japan is very slow to add more stimulus. Also some flight to quality coming in. So all of this contributing to the yen strength. We do feel, though, that of all the currencies, the pound is the best currency to be trading and from the short side. Now, moving over to the interest rate futures markets, higher prices in conjunction with lower crude oil and lower stock indices. Also, the probability of a rate increase at the April 27th meeting is virtually zero. Actually, it's at 1%. And the probability of a rate increase at the June meeting, only 20%. That's down a little bit. And at the December meeting, virtually unchanged from yesterday at 57%. So we remain neutral on the interest rate futures markets. But one other market that we don't normally talk about too much, which I'll mention right now, is the precious metals. Gold and silver are breaking out to the upside above downtrend lines. And we do feel that inflation globally, at least core inflation levels, are increasing as they first started to do last December. So I would trade the precious metals from the long side. I would trade stock indices from the long side as well, and the British pound from the short side. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.